Welcome, and thank you so much for joining us on the call today. Crazy times all around, as everybody knows, but this is actually a very great opportunity for advisors to add value to their client relationships. We know that the best results long term come from having both a great offense and a great defense. We know that risk management solutions add significant value to client relationships, especially during crazy times like this. But did you know that advisors that build in risk management discussions as a matter of routine in their client interactions add about 3 times more revenue on average in their practice than those advisors that just focus on investment management solutions? We know that that's not just from insurance revenues, but from the fact that advisors that incorporate risk management solutions gather 40% more assets under management in general because they have much deeper client relationships and deeper trust and credibility, which opens more doors to gather more assets. Now, one of the things we want to make sure during the discussion today is that you don't feel like you need to be an expert. DBS has some of the most experts in the industry today on linked benefit solutions. Brian Fair, one of our most senior and knowledgeable experts, will help outline the opportunity for you in linked benefit solutions as a way to protect your client assets against the drain of long-term care expenses. Part 2 of our series will highlight a few case studies using support from one of our carrier partners, Lincoln Financial. DBS is an industry leader in the linked benefit market, whether it's as an asset-based solution like MoneyGuard or a life insurance-based solution for your clients that are looking to incorporate a great defensive strategy. Now, again, we don't want you to become an expert. We hope to help you identify opportunities in your book of business and then call DBS and depend on us to help craft the right solution to meet your client's needs. Thank you again for your time today, and I'll turn it over to Brian Fair for the linked benefit outline. Take it away, Brian.
Thanks, Scott. Like you said, my name is Brian Fair. I'm one of the senior case design analysts here at DBS, and I just wanted to thank you today for taking the time to listen to our presentation on extended care solutions. Linked benefit products are a type of product that combine life insurance with long-term care or chronic care coverage. Now, these products have been around for several years, but in the last few years, they've really increased in popularity. So the most important takeaway is that if this isn't something you're talking about with your clients, someone else is. Now, with so many options available, it can be very hard to decide what to present to a client, what's the best fit for a particular situation. And this is where DBS comes in. We have a team of 10 case designers who are your product experts when it comes to these products, and will really help find the best fit and best solution for your clients. Now, we've all seen a lot of the statistics and the numbers. $3,900 a month in assisted living costs, $21 an hour for home health care aides, $102,000 a year in a nursing home cost. Now, there are 78 million baby boomers retiring, and 17% of them plan for long-term care, but only 10% of them own a long-term care policy, and 79% of them want to live at home. The big number, though, is that 70% of clients who are over age 65 are going to need long-term care. And that's each. That's not per family or anything like that. That's husband and wife. Each has a 70% chance of needing long-term care. It's a huge number. Now, a few other interesting facts is that $176,000 a year is a projected national average for a private nursing home in 20 years. By 2030, many retirees are not going to have enough income and assets to provide basic expenses related to long-term care. And 70% of all caregivers over the age of 70 will die first. That means the vast majority of people who are thinking, oh, my spouse will help me with this, or I've got someone who's going to take care of that, 70% of the time, they're wrong. Now, only 11% of adults over age 65 even own a policy. And again, 70% of people over age 65 are going to require long-term care, and only 11% are planning for it. Now, 10,000 baby boomers are reaching retirement age every day. This is huge. And again, the reason this is such a big deal these days and why so many people are talking about it is that 70% of people over 65 are going to need long-term care. Now, to put this in some perspective, if you have roughly 300 people in your book of business, that means 210 of your clients are going to need long-term care. Have you talked to that many of your clients? Are they aware of what's going on? Again, only 11% are planning, so you cannot assume that the 210 are going to need it, have even thought about it yet. Now, who's the typical long-term care buyer? They're usually between 50 to age 64. 92% of purchases are under age 65. This is not the oldest clients looking for it, it's the younger clients. They're usually married with adult children, they're homeowners, they're white collar professions, they're not retired yet, they own life insurance, they have conservative investments, they usually make more than 100,000, and they've experienced long-term care challenges with some relative or something like that. These are the ones that you don't even have to really sell on this. They've already seen it, they know how bad it can be, and they know that they need to do something. Now, women in long-term care are extremely important. Women live an average of 5 years longer than men. They're twice as likely to be the surviving spouse, and 75% of unpaid caregivers are women, meaning the vast majority of people providing care are women. And long-term care coverage helps protect the spouse's health and the family's finances. This is a big deal because the women are providing the bulk of the care, usually for the husband, who then has passed away, and the women are often left on their own. They're extremely interested in long-term care. You really want to make sure you're talking to the spouse as well. Now, you're also going to notice a lot of differences between men and women when it comes to long-term care. In traditional long-term care sales, it's about 67% women, 33% men as far as who's buying a policy. When we come to that life long-term care hybrid, it starts to balance out a little bit more. It's only 60% women and 40% men. And then when you get all the way to the life products with long-term care or chronic care riders, it's almost half, 55% women, 45% men. Now, why the difference? Well, statistically, we're going to see men more willing to buy long-term care protection when the death benefit is part of the plan. Men typically assume that we're just going to fall over dead and we don't need long-term care, but they like the idea that it's available to them if it comes up, if it's necessary. Whereas women are often more concerned about the long-term care component. They expect to die second. You're going to see a huge difference there. This means that a lot of times the solution that you're presenting to a husband and wife are not the same thing for each of them. There isn't one flat product that's going to take care of everyone. It's not even going to take care of everyone in the same home. So now, you always want to be prepared for a lot of the main client misconceptions. First, that you can self-insure. It's really only possible for the wealthy, and it's just not a cost-efficient way to do it. There's far better ways to leverage your money if you have money in hand. Medicaid, well, you need to be proof that you're impoverished at the time of need. You have to have accountable assets less than $2,000. You have to really work at it to qualify on Medicaid. It's usually not worth the effort of giving everything away just to get there. Medicare works really well, but the problem is Medicare is a temporary solution. It's free the first 20 days and then has a substantial co-payments for 21 through 100, and it assumes you meet a bunch of other additional things. The other options, of course, health insurance usually only covers illness and injury only. Medigaps may cover co-pays in Medicare, but not the actual long-term care costs. Insurance, long-term care standalone policies, the life long-term care hybrids, life insurance with the long-term care chronic illness coverage. These are about the only things that will actually help pay for these long-term care costs. So again, it's really important that you need to talk about it. Clients can't just assume that they can pay for it on their own. At a rough average of $102,000 a year now, jumping up to $178,000, if someone's on claim for roughly 3 years, which is about the national average, it's equivalent of buying a brand new home in the middle of retirement, but getting nothing out of it. Not a lot of clients can afford to do that. And even the ones that can afford to do it have better options. So there's a lot of different solutions available. Again, there's the life LTC hybrid products, ones with long-term care riders and chronic care riders. Now, we try and break this down into two main categories. The first is life insurance with long-term care chronic illness rider. The second are life LTC hybrid solutions. And both have great places. They're really going to come into different scenarios. So let's just talk about the life insurance with LTC or chronic care riders first. They're primarily death benefit designs, meaning that the death benefit is equal to the long-term care pool. If you buy a death benefit for $500,000, the total long-term care available is $500,000. Beneficiary gets paid whatever isn't used. So again, $500,000, you spend $200,000 on long-term care, you're going to have $300,000 left for your family. A lot of the solutions can be guaranteed, and some solutions even offer cash values and flexible premium schedules. Effectively, you're putting these riders onto any kind of life insurance product you can think of. You can go as aggressive as a variable policy with long-term care. You can go all the way down to a guaranteed universal life with a long-term care rider. The other options are the life long-term care hybrids. These are primarily based around that long-term care coverage. There is death benefits, and they're usually just recovering your premium. If you put in $100,000 premium, you might have $120,000 death benefit, things like that. The premiums are almost always guaranteed. The premium schedules are usually single paid up to 10 years. There are a few plans that can go up to age 65, and they often include some form of guaranteed return of premium. The advantage here is that they're heavily focused on long-term care. So you put in $1 in for long-term care, you probably get $4, or $1 in premium, you get $4 back in long-term care. Very great leverage designs to help boost the numbers that clients might be looking for. Then there's, of course, the question of the long-term care versus the chronic illness riders that we keep mentioning. Well, what's the difference? Well, the big difference is that long-term care riders are filed under 7702B. In other words, the same IRS rules that are used for traditional long-term care. These long-term care riders use it. Effectively, a long-term care rider is long-term care. It can be referred to as long-term care insurance. It covers temporary and permanent conditions. And the payments now can be either indemnity or reimbursement. Could go either way. They're very strong. And they also, of course, get all the advantages that any traditional long-term care policy has in regards to future laws or changes that can come around. Chronic illness riders are filed under a 101G, a different IRS code. Effectively, it just means that they're a fancy way to get your death benefit without being dead. That the payments are coming out tax-free, just like your death benefit would be. Now, these may be used to pay the exact same bills as a traditional long-term care policy, but these cannot be referred to as long-term care, either verbally or in writing. So again, like you're paying the same bills, but they're still not long-term care. Now, almost all the riders nowadays cover temporary and permanent conditions. It used to be that chronic illness would only cover permanent problems, but payment is always via indemnity. Now, the indemnity versus reimbursement argument is going to come up quite often. And I like using myself as an example because we'll find that it has nothing to do with the product. There isn't a right or wrong answer. It has entirely to do with the family. It's very important that you're talking with your clients to decide who's going to be helping with the care. How is the plan of care? Are the kids going to be stepping in to do this? Is it the spouse? Again, 70% of the planned caregivers are dying first. So you can't always assume that that's going to be the plan, but you want to think about it. Indemnity style policies simply send you a check. The family can spend the money however they want. The downside is the family can spend the money however they want. But the assumption is they're going to spend it on your care. So it's really important that you understand who's going to be getting this check. Are they aware that they're going to be getting this check? Are they responsible with the money? So on and so on. Reimbursement style policies pay your actual expenses. And it doesn't mean that you're collecting receipts every time and sending it in and then getting paid back. The vast majority of reimbursement style policies have coordination of care. Maybe they're billed directly from the nursing home or the nurse who's coming in every week and paid directly. So the client doesn't have to do much more than make a phone call. In my own personal situation, I have 2 stepkids. I love them, they love me, but I have no interest in an indemnity style policy. I don't want them simply receiving a check. I don't know what state they're going to be in or what's going to be going on with them years from now. I want them to make a phone call and have the insurance company do all the work. And again, it just comes down to simply having the conversations with your client to decide what's the best direction to go. There isn't a right or wrong answer there. Now, how do you qualify for a long-term care claim? Well, almost all the solutions will usually require a U.S. licensed healthcare practitioner, even if they're out of the country, to certify that either they have a severe cognitive impairment, this is Alzheimer's, dementia, some elimination periods will come up occasionally here on cognitive impairments, or they have an impairment of 2 of the activities of daily living. And they have to be unable to perform these ADLs for at least 90 days. This is your typical bathing, dressing, continence, eating, toileting, and transferring. And again, The doctor simply has to say that they're expected to go at least 90 days before having this type of issue. But even then, a lot of times clients aren't triggering these things for minor issues. But you could. A good example is a broken hip. A younger client may break a hip, have no issues, be back up and running in 6 months. Probably not worth triggering the rider. Older clients, a broken hip could be a very significant problem. And even though they may get better, they're never going to really be able to get back the activity that they had. They may want to trigger the rider. So again, these are going to be the same for any product, but it's definitely important to know how they pay out and how they start triggering. Now, when it comes to the policy itself, there's a lot of additional features that are going to be very, very important to consider. And this is really where your case design analyst will be able to help you decide what's important. But again, having the conversation with the clients will help you decide what is important to them. First off, is payment flexibility. If you have a pool of money set aside for retirement expenses, is that going to be the source for long-term care costs, or are you going to be, pulling it from different income sources? Where are they getting the money to pay premiums? Can they pay the premiums all the time? It doesn't do any good to buy a guaranteed policy that requires the client to be guaranteeing they're going to pay all the time, every time themselves if they can't do so. Do they need the ability to have some premium come in, some out, high or low premiums, changing things as they go? Another key importance is international coverage. A lot of people will still rely on family and friends, but a lot of times they're going to be planning on leaving the country, going somewhere else, either for trips or long-term stay. A lot of baby boomers dream of retiring abroad. In fact, the number of people retiring outside of the country increased 50% in the last 10 years. So it's definitely something to keep in mind, and ask them, what is their retirement plans? Care assistance services. Even if you have a huge check coming in every month for long-term care, that doesn't necessarily solve the problem. How do you pick what nurse is going to come into the house? Do you interview a nurse? Do you decide on different services? What kind of services do you need? How do you decide what nursing home to go to? A lot of the products have care assistance services, tools and things to help the clients really decide what they need to do and how do they start long-term care. Even things like simply just, how do I know if I need long-term care? Tools for the kids to decide, hey, how do I talk to my dad about needing help? Because I think he does, he doesn't. How do we bring this up? What do we do? And then, of course, protection against lapse during a claim. They all have slight differences in how these products do these type of things, but it's very important that once the client becomes impaired, they might not be able to keep doing the same things that they've always done before, including paying bills and keeping track of things. You want to make sure that the policy is protected against collapse when they're on claim, when they need it the most. All of these are features that your case design analyst will be able to help you decide and take a look at. Now, we have a lot of tools for our advisors that we've been building here in the office, and a lot of them are really helpful to just help decide where to go with a particular product and have an idea as to what's available. This is one of our favorite ones, where it simply breaks down the main companies that we work with and the rider and tool that they have available. And you can see it's a huge list of carriers. In the light blue section, we've got all the ones that have true long-term care riders. It explains briefly if it's paying indemnity versus a reimbursement, key things like the elimination period, and a few notes in regards to what long-term care is. In green are the chronic illness riders. These are the ones that are going to be able to really show what's available in that category. Again, these are always indemnity style policies. And then there's the third category we haven't even touched on, what are referred to as discounted chronic illness riders. These aren't their frontline products. These are kind of like your backup plans. It's easy to think of these as a ripcord type design. They're death benefit products. You're planning on the death benefit. The goal is the death benefit, but you've got that ripcord in case something goes wrong and suddenly you need the policy for long-term care. Again, we don't usually use these as lead or frontline products because there isn't any cost to these riders. They're entirely free. They're just built into the policy, just a structural part. The cost comes when you use it, which means that it's not possible to plan on or decide exactly how it's going to deal with the long-term care until you need it. Again, think of it as a ripcord. Death benefit style sale, no additional cost to have the rider. Oops, something went wrong. Suddenly the client needs the money for long-term care. Pull the cord, it'll do something. It's better than nothing, and it was free the whole time. Now, the other thing that's going to always come up is all the tools that you might need for just general looking through and deciding how to approach this topic with your clients and what to do. On our website, we've got tons of great articles with tips on having those long-term care conversations with your clients. There's advisor guides on choosing which products might be best for the clients you're working with. Again, going into the details of what's the difference between long-term care and chronic illness riders, does it matter? Flyers, sales materials, options for paying long-term care, client objections, tools to help overcome client objections, just about anything you can think of. Again, just ask your case design analyst and we'll be able to help out with that. We also have a lot of different spreadsheets that we can use to really help sort of break these things down to make it as simple as possible. Because effectively, we're trying to compare like apples to pineapples to bread. They're so different and sometimes in how they function that it's very, very difficult to simply say, this one's cheaper, they have the same numbers, great, I'm buying this one. In a lot of cases, it has to do with this one's one price, this is another price, and after a 30-minute conversation with the client, it turns out that they need this or this. It's a very difficult conversation. So we've really tried to make these things as simple as possible and give you the tools you need to be able to just at a glance be able to answer the questions. What happens if this, or how does this pay, or what's the feature on this product? It gets into great detail. You've got all the different things you need to. And again, we can sort of custom tailor these a little bit, but it just makes it as easy as possible. On the website, we've got a lot of on-demand product training that you can go through. There's videos on demand, there's product materials, all the statistics you might ever need, advisor branded consumer materials, things that you can mail out and send an email that actually have your info on it that you can use directly for your marketing campaigns. Keep it all as simple as possible. So effectively, what's next? Well, the big thing is you need to take action. Again, as I mentioned at the beginning, these are extremely popular products with clients. Clients are learning about them and asking for them. If it's not something you're talking about and you think, hey, I don't really get into this market, someone else is. And the more that they can do to help your client, the more likely they're going to start taking the other pieces that you're working on. It's a big deal to bring it up, and you don't need to do a lot to do it. Again, just simply have the conversation and then reach out to your case design analyst here at DBS. We'll take the information down. We'll come up with a couple solutions to present as detailed as you want or as simple as you want. So the big thing you want to take a look at is who in your book of business, who comes to mind right away as far as needing long-term care. Write down a few different names, come up with a few different ones, and then take a look at it this week and decide how you sort of want to approach this. What's the plan? And then start scheduling some appointments. Get them to come in and talk about it. One of the really popular ways that I've heard is to simply just ask clients if they have life insurance. A lot of times they're going to say, yes, I do. Great. Do you know if you have the old kind of life insurance or the new kind of life insurance? They're almost certainly going to ask, what do you mean by the new kind? And the new kind is the stuff you don't have to die to use. Does your policy step in and help you out with medical expenses or long-term care if something were to go wrong? Or does it just pay a death benefit? They're probably not going to know, and they're probably not going to have that kind of policy anyway. And right then and there, you found a good way to get them to say, come on in, let's take a look at it. We do a lot of these replacements day by day. And it's stunning how in many cases we can put together where you can add these long-term care chronic illness riders and still save the client money on their policy. It's a win-win in both directions. They still have the same death benefit they had. They have a better product that now covers long-term care as well, and they're saving money. There's no reason to not bring this up. Again, if you're not, someone else is. And the other thing that I've always liked, and this is a great quote here from John Maynard Keynes, is that you always want to make sure that you can't be held up by analysis paralysis and focus too much on getting the exact perfect thing, because it is better to be roughly right than precisely wrong. And precisely wrong is not doing anything. If the client goes on and they don't get a policy and they don't have something they need when long-term care comes in, the first question they're going to ask is, why didn't you bring this up? You really want to make sure that this is something you're talking about. One of the things that we hear a lot of different agents doing is putting together a little disclosure, something they can directly slide across the table and say, hey, we've talked about it. If you don't want it, that's fine. Please sign this to make sure. You always want to make sure that the clients are being taken care of, but you also want to make sure that you're taking care of yourself as well. You never want the kids to come back to you and say, hey, I found about this death benefit. It's great, but did you know that there's a rider they could have added to cover all these long-term care expenses we've been dealing with for 3 years, and it's not expensive? Why didn't we talk about it? It's just something you always want to make sure you're doing to take care of yourself as well too. The idea is to just plan for something. Again, they're going to have difficulty paying this stuff out of pocket. The expenses are typically going to be very significant, and a huge percentage of the clients you're working with, 70%, are going to need it. So it's definitely something to talk about. But again, give us a call. We'll help any way we can. And I hope everything goes well, and have a great day.